All right. Thank you for joining us on January 8th, Payroll Solutions Community Live Q&A. I have a special guest host, Josh Stanley, who's got a tool for figuring out reasonable S-Corp owner compensation. So I'm going to let him introduce himself a little bit, and then he's going to do a screen share and show us his tool that he's got.
So my name is Josh Stanley. I'm an enrolled agent and accredited business accountant / advisor. And when you're trying to determine a reasonable compensation for an S-Corp, it's kind of like a guess in the air. So what's going to be defendable in an IRS audit is really what you want to be concerned with. And just like you need the receipts to substantiate your expenses, you should have something documented before you do reasonable compensation, so you have something to prove. And that will show the IRS that you did some research to determine this, so you can win an IRS audit. There's various methods you can use. There's the cost approach, the market approach, and the income approach. Generally, I'm not a big fan of the income approach. The market approach is where you compare someone similar in your line of work. So if you're a plumber, you would look for what do plumbers in my area make and kind of use that as reasonable compensation. That might work and hold up in an audit. You still want to document it. However, the cost approach, as a small business owner, you wear many hats. You do marketing, you do janitorial, you do invoicing. And so the cost approach really breaks down all the aspects of what you do to help you determine that reasonable compensation and hopefully lower it, so that way you're not overpaying yourself and you can take advantage of the S-Corp entity itself and maximize your tax deductions. So maybe a question here.
Well, and that's a really great thing that you bring up, is that you can guess what S-Corp reasonable compensation is supposed to be. And, some people will base it off of what the net income is, or just pay themselves a little bit more than their highest paid employee, or some people don't pay themselves at all and hope they don't get caught.
Yeah.
And what I liked about your tool that you were showing me yesterday and this morning was that it really takes a lot of different factors of what you do into account. So you can really get, kind of drawn in on what reasonable compensation is for all the different duties that you do. Like, we both own, accounting companies. You do tax and bookkeeping and I do payroll. And you can say, oh, well, this is what a payroll person in my area gets paid, but you're not really taking into account all of the different things that you do. And that's where I think your tool really will hold up to an audit a lot better.
Correct. Yep. Just for the record, if anybody decides to get this tool, if you put my name in there, I think we both get some kind of discount. So if anybody decides to go ahead and purchase this, make sure you do that, because you'll save some on your subscription. So
yeah, and after we're done being live, we'll throw an affiliate link in the Facebook chat.
Yeah. Otherwise, if you don't want to pay for the tool, we can run a report for significantly cheaper for you too. You can contact Shannon and work and arrange something for you too. So here is the screen, and so as you see, there's different approaches. The market approach works best for a larger company when you kind of have one job role, like CEO or as a more a business owner. The income approach is based on if someone wanted to invest in your company, what they would expect in return, and then you kind of base your salary off of that. But as I said, the cost approach is much better. The cost approach really breaks down what you do. So if you had to replace yourself, what would that cost? And so I started a company here, your name, XYZ company, and I chose the industry roofing contractor. So we'll go in here and start the report. And eventually it will load. So you go through this interview, or your client will go through this interview thing, and you're going to select your state and county because, you know, someone in your industry in a different state or different county is going to get paid differently, say in a metropolitan, I can't say the word, in a city versus a rural area. So you'll pick your state here. And what county are you in? Shannon, what's your county? Should we use yours? I'll use mine. So I'm in St. Louis County in Minnesota.
Sorry, I forgot I muted myself.
That's fine.
If you want to go back, we can use mine.
No, it's okay.
Okay.
So then you put how many hours you work in the business. You know, the more hours you work, the more you'll be required to get paid. But if you're only doing it part-time, you would probably want to use less hours. But I think most small business owners are full-time. So I'll put 40 hours in. And then you'll start picking the stuff you do. So you're probably cleaning up your office. You might fix stuff on your own. Maybe you don't. Maybe you hire someone so you can skip that. And what do you do as far as administrative? Do you answer the phone? Deal with customer service problems? File all your receipts yourself? Marketing, are you doing your own marketing? So you might be doing the selling yourself, collecting the money. I'm just kind of randomly selecting a few here. Are you doing your own bookkeeping or your own payroll? Are you budgeting? Are you doing more analyzing of your stuff? And as a small business owner, you might be hiring someone, so you might skip this section. As far as hiring, are you hiring yourself, most likely as a small business owner? Some business owners like myself, I do a lot of the tech stuff myself, but once in a while we'll use a technician. But for the most part, I'm doing a lot of the computer stuff myself. Does your business have inventory? Most likely as a roofing contractor, you're probably purchasing all this stuff from Menards or Home Depot. And management. So here, you know, as a small business owner, you're probably not going to select like a chief executive. You might hold many hats, but in general, you might be more of a business office manager than a CEO. CEOs obviously are going to get paid more. And the goal of this is to determine a reasonable compensation. So let's say we selected that. That's all of them. And so I believe we can search here for contractor and say we're a general contractor because we want to have some kind of industry specific thing of what you do. And the next part, you're going to determine how much time you spend on it. Well, as a contractor, it's not showing up. I believe this might be the one. Probably majority of your time is going to be doing what you started your business for. And you might do a few hours of management, probably a little bit more of inventory, maybe just a teeny bit of information technology. And you want to just kind of figure out what most of your time is spent on. Probably doing more marketing, and maybe you don't have that many employees or just a couple, so you do a little bit. And the goal is you want to get this to 100%. So I'm guessing we probably do more construction as a roofer than we do the rest. So that separates out the categories.
So Josh, when you are working on this with your clients,
Yep.
Do you have them, do you give them a link to this and have them fill it all out, or do you walk them through it each step of the way?
I give them a link and have them fill it out to the best of their abilities. And then I go in and either on the phone or in person, we kind of tweak it after their initial, just because I want them to answer to the best of their abilities. And sometimes what will happen is they'll go, as you'll see later, is what's your skill in this? And they might go, I'm a super expert at marketing. Well, no, I don't think so. You know, we can reduce that, which is going to reduce the rate of pay that you would pay someone and reduce your salary. You know, as a small business owner in construction, you're probably not an expert marketer. However, if you had a bachelor's degree in marketing and then went into construction, that might be a different story. And those are things you need to kind of consider. So maintenance, you know, probably above average since you're a contractor. And then we'll move to each category and select kind of our proficiency and how good we think we're at a task. So probably average receptionist, average file clerk, just dealing with paperwork in general. Customer service, well, I have my own business, pretty good. Maybe I'll say above average there. I wish this loaded faster. Yeah, sales representative, maybe I'm above average, but marketing, I'd say average and below average. Generally, you work for someone, you're not dealing with collecting the money and doing other things, so. And I'd say never owned a business before. Maybe this person has multiple businesses, so maybe they have more experience. But we'll say this person just started their business, so they're probably low on human resources. And, you know, with your client, some of this stuff, by, you know, when you get to know them, you'll kind of determine, be able to determine maybe better than them. You know, are you really an expert at computers? Well, if you're not emailing me documents, I would probably say you're not. So now with the inventory side of things with the purchasing, you know, how long have you been in business? How long have you been doing this? Maybe he's done this for another company before. So let's say he's above average in this category. And so, like I said, usually I'll have the client come in and fill this first. Probably below average in management. And then the My Business section is going to be more industry specific. So if you're an accountant or a bookkeeper, that's where you kind of put what you do. So he's been doing this for a while. Let's say he's above average, which is why he decided to start his own business. I had one client do this, and they put expert and a lot of stuff. It was kind of funny. And I didn't allocate time, I guess.
So on the Facebook group, we've got a couple of comments.
Sure.
There's no questions yet, but Matthew Fulton says that it looks like a really great value for the tool that you're using, and Linda Artisani thinks that it's a great topic, and she gets asked this question often. And I get asked this question all the time, and normally I defer to the tax preparer to figure out what the reasonable compensation is. But if they don't have a thought on reasonable compensation, then I'm kind of, you know, scrambling to, you know, figure out what can I tell people would be reasonable compensation. So I really like this tool that you're using, because I had never seen it before you sent it to me.
Well, another issue too is a lot of people won't sign off on reasonable compensation because they don't want to be held liable. And this is an independent evaluation. This isn't me making this stuff up. This is using a tool that's helping you determine it based on the market rate in your area. So it's not really, I'm saying that this is 100% correct. It's independent. I wish I had the thing that showed that, but it's just a nice independent test, and that's what you want is kind of a non-biased as much as possible, so you can have it be defendable in an audit. So the thing I forgot to do here is to allocate the time of how much I'm probably doing stuff. So I'm probably collecting money an hour a week, and the rest of it I'm doing customer service stuff. Maybe we could say a little less, actually. Maybe I'm not collecting money that frequently. And it's nice too, as you go through it, if something's forgot, you can go back and tweak it. But the biggest thing I feel is you want the client to, oops, we said low on that one. You want the client to really fill this out first. And then based on your knowledge of the client and asking questions after the fact, you can kind of tweak it. Because like I said, the goal is you don't want to say, I'm an expert at everything. And your reasonable compensation is going to be extremely high. And if you take the market approach and say, well, what do other roofing contractors make? I mean, that might be too high still too. So
what have you done if the reasonable compensation is more than what their net income is? Because you don't want to have their wages put them into a loss.
That's a great question. I don't have an answer for you right now. Generally, if you're going to be an S-Corp, you should be able to afford to pay yourself something.
Right, but sometimes people get pushed into electing S-Corp status before they're actually ready or before they actually should. And because I've seen where their person had them elect S-Corp status and they lost $10,000 that year before they figured out their compensation. And I know in cases like that, there is no reasonable compensation because it's not reasonable to pay yourself if you're already losing money.
If you don't take any distributions, you don't have to take a reasonable compensation because you're not taking any money out of the company. There's a court case that backs that. However, I kind of feel like a lot of accountants push people into S-Corps because of the tax advantage. And because, when you're going to go to an accountant for an S-Corp, I mean, now you have to do bookkeeping. I mean, I don't believe a small business owner with no bookkeeping experience really is going to do a good job at doing bookkeeping with the S-Corporation. Your tax return is going to be higher. And I generally, personally see where the client is, start them in an LLC before moving to an S-Corp. Until you run your business a certain way and proving documentation, I don't feel it's right to start someone off right off the get-go as an S-Corporation. So I try to avoid that problem that way myself. So I don't have a good answer of what to do if you can't afford to pay yourself. There is stuff out there, and I can probably get some links to that information that kind of touches on that topic. But generally with my clients, it's I wait till you're ready to transition to something like that. So.
Right, and I was thinking more along the lines of where your net income is 50 or 60,000, but the reasonable compensation might be 100. Do you just take a portion of what your gross or your net income is, and reduce the reasonable compensation down? Or
there's a number of factors you do. I'd probably generally err on the side of taking more in a salary and less in a distribution. You have to have money to live, and so I think that's one thing the IRS would look at is if you worked a job, you'd still get paid something. So I would probably err on the side. If you have $50,000, I'd be like, maybe you should take at least $30,000 as W-2 wages, and then take the rest in distributions, just so you have something a little more to back there. But So hopefully you don't have to deal with that problem.
Right. Well,
So
it does happen, especially when people wait until December to say, oh, hey, I didn't pay myself a salary at all. And now 90% of the year is done.
mhm.
And then we've got to figure out what reasonable compensation is and can they afford it.
Yep.
So
I'm going to get back into that. I have other clients, so I can't really show you some of my screen, but
oh, do you want to stop your screen sharing and get to the right spot and share
I'm
again?
gonna put it here in a second.
Okay.
And I have my pop-up blocker on.
Well, and sometimes people come to me and they're frustrated because I own a payroll company, but I can't tell them what reasonable compensation for them should be, because I really feel like that is something that you figure out with your tax advisor, and it's part of your tax planning, and it's part of a really broad area that I'm not a tax professional. I don't know what the best thing to do tax wise is, because there's so many different factors involved with, you know, reasonable compensation and the rest of your tax picture and all of that.
And like you said, your income's going to factor. And some of these I put that I'm a super expert at stuff. And, you know, so this is just what they determine the reasonable compensation. And if you go down, they're going to break it down as, well, the percent of my hours spent 3% is this. And if I hired someone to do this job because I'm, you know, above average as a janitor, I'd probably pay someone $17 an hour to do it. And so that contributes $1,000 to my annual salary. And so it just breaks it down. And usually what I find, like I said from the start, is you're going to get a report where it's going to be a huge number because, you know, people are experts at everything apparently. And that's where I go back and want to review it with the client and kind of figure out that type of stuff, like you said, with them. And so
right, and most of the time, the only thing that they're an expert at is what they've started their business to do. Everything else, they're average or below average, whether they want to admit it or not. And I will be the first to admit that I am a very below average marketer. I really feel like I don't understand marketing at all.
And there's other things to consider too. You might say you're an expert at doing your job, but I mean, you might be a contractor. So in the state of Minnesota, you don't have to have a license. I believe it's Minnesota. You don't have to have a license to be a contractor as long as you do one thing. If you just do flooring, if you just do drywall, you don't have to have a license. Well, you don't have a license. I don't know if you'd be above average at it as a contractor who might. I mean, factors like that as you just kind of look at it and be as reasonable as possible. I would think that this might be high, but then again, maybe when I do this report, the contractor is pulling in $1 million and can afford to pay this, and maybe that is reasonable. So
well,
there's a lot of things to take into consideration other than just this report, but you want to get it as accurate as possible. And then you have this documentation that defines how you determine that versus I just pulled a number out of air, you know, thin air. And if you're an S corporation, you know, it's going to tell you how it was determined, the methodology behind it. And lastly, it gives you sample minutes. So you can put in your minutes for your S corporation. And these are all things you document.
That's another really good point that some S-Corp owners don't understand that they have to do, is that they have to have meeting minutes at least is it every month or every year?
At least annually, I believe.
Okay.
It might vary, you know, between the different states as well too, but generally I think it's annually. And the biggest thing of this is like your receipt when you go buy gas or you go purchase printer paper. I mean, this is your receipt of how you determine that. So they can see you tried to determine a reasonable salary. And generally this is going to hold up better than I just picked a number, you know. There's no defense behind that. So
Right, that's a lot better than saying, oh, well, my net income was this, so I just picked something that was lower than that and went with it.
Or you might be paying yourself too much. And you know, that's another topic as well. I mean, maybe your net profit is $200,000 and you just say, well, I'm going to pay myself 175,000 or 150. Maybe you don't have to, you know. The point of the S corporation is to reduce tax legally. And as long as you have something to back that, at least you have a position versus I just picked a number.
Yep, exactly. And I just looked at the Facebook group and I don't see anybody asked any questions. So I think this was a really good topic and it's super timely, especially with this time of year. So many people are just now trying to figure out, did I pay myself right? If I didn't pay myself right in 2019, it's too late to fix it now, but what do I do for 2020? And
there's a couple tax tricks you can do too. So if you're taking too much in distributions, they could end up being taxable. At the end of the year, you could gross up some payroll with Shannon. Another option too is if you could do a shareholder loan to yourself. It'd have to be documented, proving that it's an actual loan.
and with interest accrual.
With interest, yeah. Fair market value. It'd be like if you made a loan to anybody else. Document that, it'd be in the minutes with the promissory note. That way, instead of claiming, say, you have $8,000 in excess distributions that now you have to pay, and that might increase your tax liability. Now you can put it as a loan, and now through payroll, maybe you have to pay it back over the course of the year with interest. But I think it's really important to, however you determine your reasonable compensation, that you have some kind of methodology behind it and document it. Because if you're ever audited, you want to at least have something. Something is better than nothing, even if it's, comparing your industry and job at the very least. However, I feel like the only thing I would be comfortable defending is in a report like this, personally. So.
All right. Well, thank you very much for joining us, Josh.
Thanks for having me.